Joining me in the studio to talk about our conversation, before we get into it, look at some of our top stories, is Johnbosco Ezenwa. He's a staple on the program, showing us insights, a business consultant, and I believe a data analyst or collector.
Yeah, a data analyst. We analyze a lot of data on the economy as well as in the health space.
Okay, all right. Health space. We'll get into that one of these days. You know, that data, because we see some of these stories have come out after that whole incident with the young lady, and you see too many things have come out about the Nigerian health space and not being able to do certain things. But that version of that conversation is for a health program. But we'll look into the health sector and its impact on the Nigerian economy one of these days. We'll have you come there. Now, let's look at some of our stories. Now, the Dangote story, we'll start off with that. Now, from what I understand from this, he talked about going this route, or this route rather, which is to go coastal, which according to him would reduce avoidable costs. Now, the same you that believed that this would reduce avoidable cost and that, you know, have now come to say that it's doing it is going to bring about increment of fuel to 1,000 naira. How does that work?
Okay, so all of this is expected from a businessman, really. You know, when you're in business, you have to cut your customer. It's like winking at a lady, but not really in the dark. You have to say something sweet to get people's attention. And I think Dangote has done well to get the attention of Nigeria, even from the activities of the end of last year. You know, so there are also costs that cannot be avoided. You know, there are some costs already in the getting the refinery to work, as well as logistics. But now, if I have to go this route, interestingly, monies will be spent at the beginning, so then later on. I'm
realizing that there's been some sort of mistake on my part, so I'm just going to make that correction. The process of coastal logistics, the Dangote refinery is saying will introduce avoidable costs, not that it would actually help to reduce. So that mistake will be, you know, that correction has been made. So they're saying that will introduce avoidable costs. But has anybody insisted that they go coastal? Because if not, just stick to what you've been doing.
No, so you have to find best route, best distribution network for your product. So there's no way there won't be some form of cost to this, especially when you get in. These are the first barriers to entry, the first barriers to embracing the coastal logistics. Now, there will be cost implication. Of course, there will be some cost in terms of even the kind of equipment and the kind of machinery that will come in, and even employment of supply chain officers. There will be that first cost that will be put into shipping of this product through the coastal. So some cost will happen, and so that is where the unavoidable costs will imply. So this is natural in business. It's natural in finding new routes for your business.
Okay. All right. He was already bringing about 10,000 trucks to move petroleum products to fueling stations. So I believe that he should probably just stick to what he's already had on ground. The coastal thing is not a, what's the word I want to like say, a demand from the government for it to work. Then just stick to your trucks.
Yeah, it might not be a demand. It's new markets, finding new markets, you know, new pathways to get to new businesses, new communities, you know, also maybe cutting costs.
Like places that only water will be.
Yes, and also cutting delivery time. And all of this links back into what the discussion is in the past few days, the PMI, that is the producer index, you know, very importantly. Because if you do this, now you're improving other markets and you are bringing professionalism and also formalizing some of the informal sectors, and also employment happen, delivery time, and all of that is key to the GDP.
Okay. Now, to the halal story, the government has finally created an economic strategy. I know that Trust TV covered the event, I think last year, when it was done in grand style and all that, an event. And now it's now come that it's now, hopefully it's going to translate from desires and paper to real-time effect. Now, how can, or rather how best do you think that Nigerians can tap into this economy, because really it's actually, there's some stores in Nigeria I know that you get into, and everything they sell is strictly halal, and there's always very, very heavy traffic in those places.
Yes, true. So Nigerians, in the sense, also love goods that are halal compliant, and so it's going to open up new markets for us as Nigerians. Nigerians love wholesome products, and it's not out of place to want to play in this sector and play full-time, to formalize it, because currently there's a lot of products in shelves, a lot of that made by Nigerians that are in compliant to the halal standards. But now we need to have a national strategy to put this out so that other players can come in and also, what they call now, formalize this sector, standardize it, because Nigerians are already playing globally. The products goes from here even to the Middle East and the rest of them. So Middle East products can come here. Our taste has also improved, We also value this. It's a consumerism issue, but we are big players already. Now with this, we can now tap into that global market that exists.
All right, let's look at the EMTL allocations, John. This is one of the things that the fact, it's one of the things that is being shared. And from our story, though we didn't, do anything about it or talk about it, you see it went year on year, 111% to 416.73 billion naira in 2025. It used to be 196.99 billion in 2024. That's quite a jump.
Yeah, this is expected. There'll be more.
There'll be more.
Yeah, there'll be more. So this is not far removed from the intention of the government to really improve revenue generation.
Okay.
And the revenue generation improvement in terms of tax and other strategy is based on consumption, where it's easily tracked, consumption, usage, in terms of the kind of monies that go into the banking sector and every other forms of transfers that need to go on. So the government is already strengthening strategies on how to do some form of collection, and it's working out so far. This is a huge jump, and more is expected because Nigerians will continue to do these forms of transaction over the electronic platform, and the government will get good percentage for that. Okay,
so in case you're wondering what the EMTL means, it's the Electronic Money Transfer Levy. And I know that, earlier in the year, in January, there was this outcry about another taxation, another VAT on the transfer levy that you're paying. And everybody was like, oh my God, more taxes, more taxes. Is this one of the levies that this falls under?
So these levies, they actually exist before now. Okay. They're just being implemented. They are not new per se, just the government has now moved forward to insist on these collections. Before now, they exist in the books, but not implemented. You see, that's the issue around tax. Tax, they are organic. The government can go forward with increasing tax or go backward, given the economic condition. The macroeconomic situation makes for this tax reduction or pursuit of what is in the book to activate them or not activate them. Okay. So the government needs all the funding currently to do more of the work that they do, and also to improve employment situation in Nigeria, cut down on inflation. So this is important that it's happening, and really it will continue really.
All right, then. Thank you for that insights on some of our top stories. Let's get to our conversation for today. And we're just going to look at the Purchasing Managers Index, which you heard him mention earlier while he was talking about certain things, well, as, about the Dangote story. Now, the two people that we're going to be looking at winning, they've released a report. That's Central Bank of Nigeria, the apex bank, the regulator, and the Stanbic IBTC equally released its own Purchasing Managers Index report. Now, at the start of the year, two closely watched indicators of Nigeria's private sector health, the CBN, these are the two people that actually release this information monthly, on a monthly basis, and that's the CBN and the Stanbic IBTC PMI, paint a picture of an economy losing momentum but not collapsing. Now, both reports agree on one central message: business activity slowed sharply in January, pressured by weak demand and rising costs, even as firms remain cautiously optimistic about the months ahead. Now, for the Stanbic IBTC, it fell to 49.7 in January, slipping below the critical 50-point threshold for the first time ever in January. And I think, according to the story seen somewhere else, it's saying that this is the first time in 14 years since this Stanbic has started doing this PMI. This is the first time it's going below that point, signaling a mild contraction in private sector activity. Now, by contrast, however, the CBN remained above 50, at 55 actually, 55, indicating that the activity that was still expanding, though at a slower pace than in December. The contrast here is Stanbic surveys suggest the economy briefly stalled. CBN's data suggests slowing growth, not outright contraction. Those are the numbers. Now, I'm going to start off with a very important question while we'll wait for having a picture on the screen to give us side by side the numbers, the contrast of what this is talking about. Now, why do these two reports tell a slightly different stories about, of course, the same economy?
Okay, the reports are, the central theme is saying, that there's some form of stalling of the economy. But again, you look at the methodologies that were employed by the CBN and also by Stanbic IBTC. This has happened from the kind of methodology employed by all of them, and also the sampling. How was the sampling done? How many supply chain managers were interviewed on both ends? Sampling also play a huge role. But we can't put it out of place that a very great indicator for our economy has been put forward. And whether we like it or not, managers and investors and everybody who cares about the economy of our nation is watching and will act on this report. The central theme about this report is that the manufacturing service, the most important industry, the industrial service is the most important, that drives the economy, that drives if we have inflation or not. So it means that more work needs to be done on the manufacturing end of things, because the manufacturing simply tells that you are going to face hard time, that productivity is low. Now, but the most important thing is that if you improve manufacturing, that's the central theme around all of this. If you improve manufacturing, where delivery time, raw material, employment, all of this work, improving manufacturing by 20% also improves the service sector by 80%. This is just key.
They go in tandem.
They go in tandem. The manufacturer is the most important part of this. If the manufacturing sector is improved, improving the manufacturing capacity or the industry by 20% puts an 80%, because the service industry pulls from its successes from the manufacturing. Now, what this means at the end of the day is that government must begin to look at strengthening manufacturing industries as well as agriculture. If you notice, the CBN report has a lot around the agricultural sector which performed better, in terms of expansion. So the reports are not far removed.
Okay. Okay. Let's take a look at that table there that was shown earlier, where we would see side by side the numbers now for the headline PMI above 50, for Stanbic is 49.7. Now, what this means, according to that, is the CBN shows slowing growth, but Stanbic is saying a stall, a brief stall. Now, for overall trend, expansion is losing momentum, according to the CBN, while this is the first January contraction on record since Stanbic started this about 14 years ago. Now, of course, it's saying, according to this, both are saying that the economy started on a weak footing. New orders and demand, growth has weakened. According to CBN, Stanbic is saying stagnant growth streak ended. Demand slowdown is the core problem. Output activity still expanding, according to the CBN. There's a slight decline, according to Stanbic. Firms are producing cautiously. Worst performing sector, according to the CBN, is trade-related activities softened, while the Stanbic says wholesale and retail dragged PMI down. Consumer-facing sectors under pressure. And to the next one, where we see manufacturing remained resilient and continued expansion. Supply side holding up better than demand. Now, unemployment stable to improving, according to the CBN. Job creation for 8 straight months. Now, firms are retaining workers despite weak demand. Input cost, elevated cost pressures, costs rising sharply, inflation pressures persist. Output prices are rising. Output rise, inflation at 4-month high. Businesses passing costs to consumers. One of the things that Dangote was talking about, at the end of the day, if we have to do this, it will get to the consumers. Now, business outlook is a positive one but cautious, according to the CBN. However, the Stanbic is saying this optimism is dipped, but they still remain positive. Confidence exists, but it is fragile. That's the summary and overall look of that both reports side by side. They're kind of saying the same thing at some point in time. And as you mentioned, manufacturing, it remained resilient and continued expansion. And we see some of these things keep happening. One other report that has come out, earlier in the week was talking about business confidence, coming down. That's a business confidence report that was released, and that cost of business is now high. And it seems like when we look at this report, we can see that that might just be, something to look into, that maybe this report is actually referencing that cost of doing business has actually gone high when we see input cost elevated, cost rising sharply. With all these numbers and this contraction, what do you think policymakers should do?
So, interestingly, these reports, putting them side by side, is not different. They're speaking in the same language. Yes. So it's not out of place to also say that we have just come from the festive period. In the festive period, there are a lot of spendings and all of that. But when you get into the new year, people are uncertain how they want to proceed. And let's don't forget, this is towards the electionary year. We have the elections coming up next year. So manufacturers, businesses are also keen on even knowing where the government spending will go. And the government spending this time will go towards infrastructure, all of that, to prove their comeback, for the next time. Now, that being said, this is a wake-up call for the CBN and also for policymakers to really begin to think about policies that strengthen the manufacturing industries, as I said earlier. As I said earlier also, if the manufacturing industries improves, other sector like the service and the likes, they get strengthened. And so the manufacturing industry will tell in terms of the supply chain, output, and the inventory within. Do we need raw materials? Are they easily accessible? Are they going to be supplied to us? Do we even have the money to go for them? Also, we also have the steady foreign exchange currently. We've had them for a few time now. So that will also impact on the study. And the confidence to do business, yes, is there. We have an electionary year. People are not sure about doing business because, policies are not stable, given the governance that exists. Now, that will also inform how investors will go forward to do some form of investment. So, but then when we move to February, we'll be sure that all of these gains have been achieved and what else needs to be added to the fold. But manufacturing is key. Access to finance for manufacturers will be key to get in employment, to get productivity moving, to get goods in the market at cheaper costs so that costs are not thrown to consumers again to continue to spend, given that there's a huge spending problem currently, given the resources available.
Okay, so when we look at the input cost and demand, let's look at it side by side. Why does it seem like the cost pressures are still going up, even when both demand is slowing down and going low?
Okay, so demand is going low because there are not so much available resources pursuing to buy anything. This is a basic economy, really. But manufacturers have staff to maintain. They already have inventories in their warehousing, and they also have done some production and want to put it in the market. So you have like a stalemate. I have products, I have this, I have planned for this, but people are not, or consumers are not taking up. So these are the issues. So we hope consumers take up. Though we have put some cost and prices, we've passed on some cost to them. So we hope they take up. We hope there will be some form of intervention where we can purchase more or get our product into the market easily and extend new routes for our businesses.
When we come to the employment part of that table, we see that it says that it's stable to improving, job creation for 8 months, firms are retaining workers. Why and how is it that the employment remains resilient even when demand is quite low?
Okay, so I'll tell you, for businesses, it is not. For some reason, businesses are not asking workers to leave. They just continue to keep them. Given that they now have built expertise, hoping. I think Nigerian businessmen have done well. Training people on the job, getting them ready for the next big thing. So usually they don't let people go easily. Sometimes it's emotional reasons. If you work with HR, you realize emotional reasons to keep families, to keep earning or get families moving. But it is out of place from where I see it that you have some strain, but you're still keeping the your staff, you're still keeping them in one piece. But what needs to happen is that we need to begin to think about opening new markets, and the businesses are thinking in this line, because the plan really, as where I sit, is to open up new markets where these employees that they have will go and get new markets, open up new frontiers, and all of that. But most importantly is is a waiting game. Let's see what happens. Let's see what happens, you know. And I don't think it's good for business, and that's why the government needs to really do some form of interventions in terms of the spendings, you know, and then allowing for some kind of policy changes to get businesses moving.
Thank you for going there. Policy changing. What kind of policy changes should we expect to help raise up demand without worsening inflation?
Okay, so all of this needs to be kept in check. You know, if you the PMI in the best sense of it really talks about, it can help you know the GDP, how you are doing. You know, government is actually obsessed about PMI. This is very good for the government, you know, and I don't want to speculate, but that's why you see the CBN numbers are better in face value, and then you have the one from the bank different. So it helps the government to know, are we doing okay? Do we need to reduce or take up interest rates? You know, it's about interest rate now. The government needs to look at all of this. So interest rate needs to be lowered so that more businesses can go get loans to improve their business or get new markets or create new opportunities, you know. So the interest rate is now what needs to happen here. You know, given the PMI currently, the interest rate will strengthen the manufacturing, also strengthen agriculture, and in the long run, the service sector will do better and people can move around. All of this also are still tied to transportation. What is the cost of energy? What is the cost of fuel? You know, just recently, during the Ember months, we were having a few days, we were buying less the cost. And so there was speculation that if all of this continue, by March, we may begin to buy a petroleum product for between 500 to 600 naira.
But that turned tide in January.
We don't know what is happening with that. So, but we still look forward. It's about the interest rate now. The only policy change that I think needs to happen is the government to begin to look at interest rate.
Okay.
Do we lower interest rate? And that's for the same reason why a lot of Nigerians or investors have gone to take government bonds.
Yes.
So they can get value for money.
Yeah, treasury bills, you know,
treasury bills
subscriptions are going up a lot, yes.
Yes. You know, and all of these are tied. They are all, it's just an interplay between all of these sectors, from treasury bill to interest rate to inflation to the PMI to CBN regulation to monetary policy. These are, it's a whole lot happening, the interplay. And for now, it is fair enough, but injection of interventions need to happen.
Okay. All right, let's move on to something else. A report from a fintech company came out earlier in the year, and it showed about mostly the people who used their appliances or their network or their operations, spending patterns. That's what we're going to look at from that report. Now, according to the report, everyday spending dominated. Most transactions were small ticket, high frequency, showing Nigerians are prioritizing essentials over discretionary purchases. Now, one of the things earlier when I came across that story was the fact that in a day, Nigerians spent billions on just food, if I'm trying to get that information. And it says here that according to that report, every day in 2025, Nigerians spent over 8 billion naira eating at restaurants that have that fintech's POS. Now, of course, certain places were working. Another thing is Nigerians spent over 90 million naira at gyms every day in 2025, totaling 32.8 billion naira for the whole year. Now, Nigerians love their bread, and they spent 1.7 trillion naira buying bread from bakeries that just use that particular fintech. So that's just one fintech.
Yeah.
So imagine the others.
Yeah.
That goes to show our spending patterns. So still with that, what do you make of Nigeria's spending patterns, and what does it actually tell about us?
Yeah, I'll say this. Like, I'm so excited to see this. It simply shows that Nigerians' tastes have changed tremendously. The Nigerian of now is not what you know in the 90s. It means that we're spending a lot of money in food and gym. It means that we're becoming elitist. You're becoming very elitist where you spend money on food and gym and also on bread. It's not out of place. It simply means that we have a stable country. A country that has war won't be spending money on gym and food. It means that we have a country that works. We have a stable country. And so in terms of the confectionery, it is true. All of this, I say is true. I buy bread every other single day when I go home. So, but it shows that we have our tastes have changed. We are trying to get healthy in terms of going to the gym, by inference.
And so eating bread.
And also eating bread. I don't know how that works in the measurement space.
Okay.
But that's all I say. I just say that these are good measures also to tell you where fundings are going and what Nigerian people or the nation spend more on, what are our priorities. So food, exercise, and confectionery for now.
You said something about we're in a stable country and you're elitist, but then we keep supposedly the poor capital of the world. And how does that translate? Okay,
so in hindsight, right? Nigerians will still. It's a different context. Nigeria will still want to make themselves feel good
and happy. Yes.
No matter we are the happiest people in the world. Give or take. So. Given all the situation around us, we still want to make ourselves happy. We go out to eat with friends, and then we get stuff for our family, and then we go out to gym for bonding reasons. Some of these gym are for business reasons, for social reasons, and the rest of them.
Away from the health part too.
Yes.
There's a social aspect to it as well.
It's to also socialize, create network for businesses, and also meet new friends, So it's not out of place. We're making use of what we have, but making use of the situation and what we can do to just salvage. Everybody just salvages the situation, really. Okay. Nobody has a long-term plan.
All right. Now, let's go to the places where these things really happen. The store activity was in food trade, agricultural supply chains, transport, healthcare, and food-related services. Now, there was weaker growth in luxury and non-essential services. Also, loans, the access to short-term SME credit helped businesses smooth cash flow and maintain supply rather than expand aggressively. And on the remittance part, the UK to Nigerian remittance flow supported household consumption, especially in urban centers. Now, all this together, what do you think that tells of our economy? We talk about agriculture. We see that even in this spending, we still quite spent a lot in agricultural supply chains.
No, because the agric is key to all of this. That's why you see the CBN breaking the PMI report into the agric space, the industry, and the service. Because the agric sector is still a major driver of the Nigerian economy. So when you have this measure on the agri space, and it's easy to do some form of distribution, if these businesses or the agri businesses or people in the cooperative are on this platform, say the fintechs, or any of the bank platforms, so they support to help distribution. And because these MFBs and fintech are now closer to the communities, you can begin to get other financial services in terms of loans. People now have loans. But the most important thing for me, really, in all of this report is the fact that our fintech has grown to the point where we can now do transactions from abroad, to have monies come, repatriate funds from abroad to support families, support businesses here. Unlike what has happened in the past. And it's a blessing in disguise when some companies who were hoping would be in Nigeria didn't come in Nigeria. So Nigerians developed their own form of technology, and now we're holding.
We're throwing shades now.
Yes, I'm not throwing shades. I'm just saying, for us, we're happy about this. So
Nigeria. But Nigerians have a tendency to be elitist that want to go and still join that particular brand that didn't deem us worthy a few years back, but now deem us worthy now.
The beauty about all of this is the fact for innovation. Innovation is key, and thanks to the banks who allowed Nigerian technology to provide support for their transactions. So this also had improved those technologies to really innovate and expand. And now we have a place where every other people who rejected us were now the beautiful bride We have the population, we have the great market. Every other business who rejected us in the past are now cutting us or coming around us to get deeds. And so it is good that we're here now, and I see more innovation, and I see that we've built the governance, for these businesses. We've built also the trust and the social capital to really go around the world and be trusted to do this financial inclusion and the services that are offered currently.
All right, in less than 30 seconds, give us your outlook for the year 2026, owning with this, the PMI's numbers, and of course the spending pattern that came out from 2025.
Okay, so I see greater things, I see improvements in terms of what will happen, given that we're in the electionary year. There will also be a flow of funding to different sectors, especially the agri sector. I don't know what will happen to the manufacturing, because for some time, the manufacturing sector has been clamoring for some form of intervention. But I just wanted to say also that the manufacturing sector is the most important. We are a developing nation. Developed nation can do better with services, but we need manufacturing to get in the jobs. We have a lot of unemployed persons. Only the manufacturing sector can open up. And I also want to say here that, as I said earlier, improving the manufacturing sector by
improves the services
just 20% puts 80% across board. So I see that the government will also do things around the interest rates to really improve services and also get more businesses to happen. I also say that the government must push for PPP, public-private partnership. For some of the refineries they plan to do, I don't think it should be government money full-time. There are a lot of high net worth individuals in Nigeria and great executives and businessmen that can come up with strategy to get these refineries to work. And the more the merrier. It puts away the fear for monopoly and all of that. So I see great outlook for Nigeria. All
right. Thank you so much, Johnbosco Ezenwa, for your insights on our conversations this morning. That's it for Business Daily this morning. My name is Chiamaka Nwafor. Thank you for joining us. Same time, same place next week. Bye for now.
This program is brought to you in partnership with the Central Bank of Nigeria.